Welcome to the Profit Cartel video series of Backtesting, my signal service trading strategy. This is episode 2, where we'll apply the methodology, this time focusing on Centene Corporation to see how well it performs under real-world conditions. If you're new to this series, I recommend checking out episode 1 to get the full picture of what we're doing here and why. No filters, no edits, just real, transparent testing. I'm committed to showing you every trade, win or lose, without cherry-picking or editing to boost success rates. What you see here is exactly how the trades play out in real time. If you appreciate these transparent, no-nonsense reviews, please hit the like button and subscribe to support the series. And if you're interested in free daily trade signals sent via WhatsApp or Telegram, check out the links in the description. As with the previous episode, I'll be using the earliest available data on TradingView, maintaining the same risk level, aiming for a $100 profit on wins and a $250 loss on trades that don't work out. I'm also keeping the same ATR-based take profit and stop loss levels. Consistency is essential in trading, whether you're backtesting or going live. Using standardized rules for take profits, stop losses, and quantities allows us to gather clear, reliable data, which is the foundation for building skills, confidence, and, most importantly, accuracy in trading. In our previous session with Tesla, we saw some impressive results. Here's a quick summary. Win rate, 91%, a fantastic outcome. Total profit, £850 for low risk, £950 for medium risk, £1,000 for the higher risk. 12 trades in total were taken, averaging £83 per trade with the high-risk strategy. We accumulated a total of 87 days in the market. These results show a solid performance and provide a strong foundation as we move forward with our next test. So, let's dive in and see how this strategy performs with Centene Corporation. Here we've got a signal triggered at a bullish candle with an ATR take profit at 7.00 and stop loss at 5.87. This signal aligns with the strategy's indicators and structure, so we're all set for our first trade. We are off to an ideal start, taking profit in only 2 days. As always, I'm logging this in my trading journal. This simple habit keeps the process disciplined, letting us track each outcome and adjust over time. In this episode, you might notice an additional column in the journal labeled Ticks. This is a new feature for us. I haven't included it in my personal backtesting journal, which currently holds over 650 trades with this strategy. But I thought it would be interesting to track tick scores along the way to see how they shape up. To clarify the terminology, points show broader price changes across the market. Ticks capture the smallest price increments for tracking minor shifts. Pips are mainly for precise currency changes in Forex. Adding ticks offers another layer of data, and I'm excited to see how it deepens our insights into strategy performance. All right, here's our next entry. A bullish candle at 5.61. Profit was hit within a single day. Quick gains so we can move on to the next setup. For novice traders, it's essential to first master the fundamentals. Understand brokers, spreads, commissions, slippage, platforms, risk-reward ratios, and lot or unit sizes. Even with high-quality trade signals, a lack of knowledge can still lead to losses or even blown accounts. Please do not gamble and risk your real money with mine or other signal providers. Spend time developing yourself and your understanding of the markets, mainly how to correctly place a trade with the applicable account risk and lot or unit size. Focus on the 3 Ps: practice, patience, and persistence, and always start with a demo account before trading live. Everything in place for our next entry. So we finally hit our profit target in 19 days. The key to this strategy is patience, letting trades play out no matter how long they take. It's truly a set and forget approach. The real challenge comes when fear and greed kick in, tempting you to exit a trade prematurely. Managing these emotions is essential so that you can stay disciplined and stick to the plan for consistent results. The strategy can only work if you move out of the way and let it. Here's another promising setup. And here we are, a large gap down stop loss taken out. I'm sure in the live markets, this trade would have resulted in some severe slippage, which is frustrating, but on the contrary, it can work in our favor when the trade goes our way. It also is likely to provide a very quick turnover into another setup. I will now input the fixed loss amount of negative $250 into the trading journal. On the following trade for the purposes on the backtesting series, I will double the risk at negative $500 with a potential $200 profit. With the entries all set, let's see what happens next. So as hoped, a double profit of $200 in only 4 days. I inputted the number of days as 1 rather than 4, so I will have this amended for the next video. After logging the results, we can then move on to the next signal. Although the next entry on this particular asset is nearly 2 years away, this doesn't mean there aren't plenty of trades to take daily. Yes, you heard that right. With the vast range of assets available to trade, there are more than enough opportunities to keep you active in the market. At the Profit Cartel, we provide free daily trade signals to members of our WhatsApp and Telegram groups. Don't miss out. Use the details in the description to join us today and stay ahead with every opportunity. On this next position, now we have covered some of the previous loss, we revert back to our initial risk of $100 profit and negative $250 for a loss. This will continue until we hit our next losing trade. And here we are, another loss to add to the books at minus $250. With the double profit strategy, which will be changed to double risk in future videos, we now double the risk to $500 with a target profit of $200. In live markets, profits may vary, and that's okay. The key is to focus on risk, not profit. Calculate your lot size based on the risk you're willing to take, which should be a portion of your account size or available margin. Managing drawdowns is crucial for keeping your account healthy and growing over time. By prioritizing risk management, you ensure the correct application of the strategy and create a smoother path for recovery and long-term success. Swiftly moving into our next entry at a double lot position, we are looking to regain some of our previous losses on this next move, which fortunately for us has only taken 1 day. The most notable aspect of this strategy is the reverse take profit and stop loss. Opinions on its effectiveness can vary widely, and there's no definitive right or wrong way to approach it. Ultimately, its success depends on the individual trader, their strategy, and their aptitude for risk. If you've been told the only path to profitability is with a 1-to-1 or higher risk-reward ratio, it's time to broaden that perspective. Subscribe and hit the bell icon so you don't miss the upcoming videos where we'll bring visual evidence and data to show you can reach the top of the mountain from different sides. With each profit, the cumulative returns are becoming impressive. This highlights the value of using fixed lot sizes or position units tied to a percentage of your account balance or available margin. The high success rate of this strategy allows for a controlled increase in risk following any losing trade on the same asset, aiming for optimized recovery. Our journal's 3 risk management techniques make it easy to see how determining the right amount to risk on each trade enhances overall strategy effectiveness. This information about single, double, or even triple lot sizes is already provided through our free signal service, as we handle all the tracking for you. Moving on to our next single risk position at 7.00. Profit secured in only 3 days. I accidentally inputted the number of days as 1 when it was actually 3. I will have this corrected for the next stock video. And that wraps up part 1 of this 2-part backtesting series. I hope you found something valuable during this session and that it's inspired you to dive deeper into your own trading strategies. If you have any feedback, questions, or insights to share, please don't hesitate to drop a comment below. I make it a point to read every single one and engage with you. Your support means the world to me. So if you could hit that subscribe button and give this video a like, it would not only help the channel grow, but also keep me motivated to bring you more trading content like this. Thanks for watching, and I'll see you in part 2.